Most people don't lose money trading Bitcoin because of bad charts. They lose it because of what happens inside their head while they're staring at the chart. Tonight, I'm not teaching you indicators. I'm teaching you the one strategy that has outlasted every bull run and every crash since 2011. Position trading. Position trading is simple to explain and brutal to execute. You identify a long-term trend in Bitcoin. You enter, and then you hold. Through the noise, through the dips, through the headlines screaming that it's over, until the trend itself changes. No 5-minute charts, no refreshing every 10 seconds. This is weeks, months, sometimes longer. It's not exciting, and that's exactly why it works. Excitement is what destroys most traders' accounts. Here's the truth: the hardest skill in trading isn't finding a good entry, it's tolerating boredom long enough to wait for one. Psychologically, this is where most people fail before they even start. There's a well documented bias called the action bias, the human urge to do something, even when doing nothing is the correct move. Traders check charts compulsively, convince themselves they're missing out, and jump in early. Position trading punishes that instinct immediately. The professionals you never hear about, the ones quietly compounding wealth over years, they've made peace with silence. They wait for structure, a clear trend, a higher low, a confirmed breakout, not a feeling, not a headline. Structure. Once you're in the position, a new enemy appears. Not the market. You. This is where loss aversion takes over. A psychological principle showing that the pain of losing money hits roughly twice as hard as the pleasure of gaining the same amount. So when Bitcoin drops 15% mid-trend, which it will repeatedly, your brain screams at you to sell, to protect what's left. That instinct kept our ancestors alive. It will destroy your position. The traders who actually build wealth in this space aren't the ones who predict the market perfectly. They're the ones who can sit inside a 20% drawdown, look at their long-term thesis, and do nothing, because they decided their exit conditions before emotion entered the room. Write your reasons for holding before you enter, not during the dip, before. That single habit separates position traders from everyone else scrolling in panic at 2 a.m. Entry gets all the attention. Exits are where fortunes are actually kept, or given back. Here's the uncomfortable truth: most traders don't have a sell strategy. They have a hope strategy. They hold gains too long, chasing a number that keeps moving, driven by what's called the greed fear cycle. Euphoria at the top, panic at the bottom, and almost no rational decision making in between. A real position trader defines their exit in advance: a trend line break, a moving average cross, a predetermined target based on the original thesis, not on how good the profit feels in the moment. Discipline isn't glamorous, but it's the only thing standing between a paper gain and a real one. I'll give you the truth plainly, because most content in this space won't. Position trading Bitcoin doesn't guarantee profit. No strategy does. Bitcoin is volatile, and long holding periods mean real drawdowns, sometimes deep ones, before any thesis plays out, if it plays out at all. What this strategy does give you is structure, a way to remove impulsive decisions from a market designed to provoke them. The edge was never a secret indicator. It's the ability to think in months while everyone else is thinking in minutes. Master your patience before you master the market. Bitcoin will still be here in 6 months. The question is whether your discipline will be.